Hey guys, welcome back to another video. My name is Timothy, and on this channel we speak everything personal finance. I hope you guys have been enjoying the videos. We are uploading once a week. So in today's video, we are talking about what you should do with your tax refund. Let's get right into it. It is tax time, and around tax time, we are all excited to get something called a tax refund. If you don't know what a tax refund is, a tax refund is a rebate payment to a taxpayer for paying too much in taxes. When you pay too much in taxes, you get something called a tax refund back, and you get that money back to you. So it's really you getting your money back. But the bad thing about tax refund is that you're basically lending the government money, and they're giving you that money back without paying any interest on it. Everyone does not get a tax refund. In fact, 3 out of 4 Americans get a tax refund, with that tax refund being around $3,000. But like I said, keep in mind that money is all yours. It is your money, so you're really just giving Uncle Sam a free loan. But hey, at least we're getting it back, right? While you should aim to get a large refund back, here are some things that you can do with your refund when you do get it. First thing you can do is pay off your credit card debt. Credit card debt can really weigh down your financial future and put a big hinder on your financial progress over time, especially when you're paying minimums on credit cards where interest rates are over 20%. You'll really never pay off that credit card in totality if you're just paying minimum. But this is where your tax refund can come help you. So what you want to do is put a certain amount, a chunk, or even all of it at this high interest credit card debt. That's where you want to attack your high interest credit card debts first, because as time goes on, these cards will be accruing the most interest and holding you back from your financial future. So the faster you knock out this credit card debt, the more money you can put toward investment accounts. There's 2 methods you can use when paying off credit card debt. The first one is the avalanche, which attacks the highest interest debt first, and the second is the snowball method, which I first heard from Dave Ramsey. For the avalanche method, say you have a credit card that has 20% interest and you have another credit card that has 15% interest. So you're going to pay off the 20% interest first, because that one will be accruing the most interest, and once you're done paying that off, you then go to the 15% and so on and so forth. For the snowball method, you pay off the lowest balance of your debt, and then you continue to go towards the highest. So say you have credit card debt that's $1,000, and then you have another debt that is $5,000. So you're going to pay off this $1,000, and inside your mind, it feels better seeing these lower debts go away, seeing your debt disappear. And it's easier to pay off lower debts, so you'll get a boost to pay off those higher debts. So once you pay off the lower debt, you will then snowball that money into the higher debts, and you'll keep doing. This is something that I'm doing while I'm paying off my student loans. My student loans are broken down into different categories. It's all one chunk, but it's broken down into different categories. I have about 5 to 6 student loans that I'm just paying off the lowest, because in my mind, it makes me feel better to pay off the lowest debt and then continue to go that way. That is one thing you can do with your tax refund, is pay off your credit cards. And I highly recommend this be one of the things that you do. Maybe not use all the money paid for credit cards, but use a good amount of it so you can get jump started on improving your financial future. Number 2, add to your emergency fund. You should have an emergency fund of a month of expenses. Funding your emergency fund could be a great thing to do with your tax refund. If you don't have an emergency fund, this could be a great time to start it. So if you don't know what an emergency fund is, so an emergency fund is money set aside for a safety net. So to calculate your emergency fund, you want to get your bare minimum expenses and multiply that by 3, which is 3 months, 6, which is 6 months, or 12, which is 12 months, and that will give you your emergency fund. So if you lose your job, you can have this money for 3 months, 6 months, 12 months, to find another job and kind of make the transition easier, so you're not relying on credit cards while the transition is happening. I recommend having a 3 to 6 month emergency fund. So if your expenses are $2,000 a month, you're going to multiply that by 3, and that will give you $6,000 for your emergency fund. That means if you lost your job today, this money should last you for 3 months. And you can do the same, and if you're feeling really good about yourself, you can do for 6 months, which is also another recommendation of mine, and that will be $12,000 that you will have to have saved up. So if you lose your job or if anything happens, you have that money in your account, and it should last you for 6 months. So I would recommend that you fund your emergency fund with your tax refund. And depending how much money you get back for your tax refund, it could put you weeks or months ahead for your emergency fund. Add to your retirement. No matter how old or young you are, it's never too early or late to add to your retirement. You only have so much time for your prime working years, so we need to save for your retirement now so that you don't have to work when you're 50 or 60 years old. You can sit back and relax and enjoy the retirement you worked for back in your 20s. A retirement account that I recommend is a Roth IRA. You could put your whole tax refund to your Roth IRA, and if you did that every year, you will come back with a lot of money. I'm going to give you guys an example of what this could look like. Putting your tax refund into a Roth IRA, and you'll be shocked by how much you've earned by just investing your money. So we're going to say you start at 25 years old, and let's estimate that you get the average, which is about $3,000 back for your tax refund. If you invest this money for 30 years, by the time you're 55, you'll have about $283,000 in your investment account. At an 8% return, you'll have about $330,000 in your investment account. At 9%, you'll have about $408,000 into your investment account. And at a 10% annual return rate, you'll have about $500,000 into your Roth IRA just by investing your tax refund. This is not even including the money that you could be investing throughout the year from your W-2 job. And this is not even including the money that you could be investing into your Roth IRA throughout the year. This is only off your tax refund. Personally, my Roth is through Fidelity, but there are tons of other companies that allow you to fund a Roth IRA. And for this year, the 2024, the limit that you can put into your Roth is $7,000 if you're under 50 and $8,000 if you're over 50. So if you invested $3,000 into your Roth every year, that means you would only have to invest $333 into your Roth to max it out. So definitely consider investing into your Roth. Definitely consider funding your Roth or beginning a Roth IRA with your tax refund. It will help you tremendously. Another thing you can do with your tax refund is start a business. Start a business that you have always wanted to start. You can use your tax refund money to do that. Because this is money that you're not really banking on or money that you're not really praying on, this can be used for discretionary things like starting a business. Whether it's an FBA business or drop shipping or whatever kind of businesses you're interested in, you can use your tax refund to start those businesses. $3,000 is a good amount of money, and there's a lot of businesses that you can start with only $3,000. I will always say this, that the true key to wealth is starting a business. The earning potential can be endless. So while you're doing your W-2 job, you should always think about starting a side business, a side hustle. And if you don't know what kind of business to start, there are many businesses that you could find to start just by doing a quick Google search. And if you want to know some great side businesses that would generate you some cash, make sure you follow this channel because I will be dropping a video on that in the future. Another thing you can do with your tax refund is fund your kids' college. The cost of college is on the rise, and according to 2022 and 2023, tuition has increased at least 1%. Currently, public schools are at about $40,000 a year. So to ease the financial burden, you can set up a college funding for your kid. One smart option is to fund a 529 plan, earning tax-free earnings and tax-free withdrawals for college education expenses. You don't have to throw your whole tax refund at this, but even $300 a month can help fund your kids' college. Let me give you some numbers right now. By just putting $300 into your child's 529 plan and say it grows at a 10% rate of return, by the time they're 18, you'll have $180,000 into their plan. This could pay for their whole college tuition or a good amount of it. I know it would have paid mine off if my parents would have done this. So this is something that we will be doing when we have our child. Starting this year, we are going to be putting our tax refund into our child's 529 plan. But one thing I want to remind you guys is to definitely take care of yourself first. The saying is put the mask on your face before you put the mask on someone else's. So take care of your retirement. If you're able to fund your child's college, this is just another option that you can do with your tax refund. Another thing you can do with your tax refund is to invest into your home. Updating your home with this tax refund money can also help improve the value of your home. So you don't have to look at it as money that is lost, but it is money that is invested into your house. So if you ever sell it or if you refinance it, they will consider the improvements that you've made with this tax refund money into the new value of your home. Or you can save on bills with your tax refund and buy a more efficient oven or a more efficient washer or drying machine, which will save you money in the long run. And also invest to your family. I'm not saying blow the money on your family. I'm not saying blow it on a vacation, but go do something with your family with this money. $3,000, if that's what you're getting back or more, it's a lot of money. And you don't have to just put it all to investing or paying off debt, but definitely spend time with your family. Take them to a nice dinner, go to the zoo with your kids, take your family out. A good way to use it is start a vacation fund. Put $1,000 or $500 towards your vacation that you'll be taking in a year or two. You can then go on the vacation of your dreams. Another thing you can do with your tax refund is help others out. Money is a tool and we must use it wisely. It can be taken away from us just as quick as it was given to us. Help others out with their money from your tax return. Donate to a local charity. Giving is a very important part of finance. And there you have it, guys. These are all the things you can do with your tax refund. From investing it to saving it towards a vacation with your family, it's your money and it's your decision what you do with it. But if you have no idea what to do with it, you can refer back to these tips and it'll give you some direction. I hope you guys really enjoyed this video. Don't forget to like and subscribe to my channel so you can see more videos like this, and I will see you in the next one.